Thanks for meeting with us today. Just to introduce ourselves, my name is Jenae Kerr from Imperium Point Consulting. Our team will be giving you, as the Board of Directors, a full review of your company's performance over the 8 years it's been operating, taking a close look at how your company have adapted to the evolving market, the areas for concern over the course of the 8 years, and how products have fared, followed by a competitive analysis and an environmental analysis. At Imperium, we pride ourselves on offering insightful advice and knowledge to our clients, and our team combines specialist skills in finance, operational management, strategy, and information technology to ensure your company is performing at its best. Today, helping with the review is Robert Fox, Managing Partner, Cara Jalemi, Sales and Business Analyst, and Melissa Rowe, our Finance Analyst. We'll start from the beginning to taking a look at Baldwin as a company. Baldwin's performance and products initially faced some ongoing issues as a result of strategy choice. While others in the market were clearly spending money on research and development and had large marketing budgets, Baldwin invested heavily in lowering their production costs and phasing products into the traditional market where their aim was to dominate. Over the years, sales forecasts and production decisions for the company were quite accurate and business choices were all quite conservative, particularly after receiving an emergency loan in their second year of operation as a result of poor financing. When labour negotiations for the industry commenced, Baldwin appeared to be well prepared. High automation levels and high contribution margins meant you had the ability to negotiate mid to level high rates with employees and keep them happy, and you weren't negatively impacted when a competitor entered the negotiations at the extreme high end. The graph gives you a great understanding of where you stand as a company today. Overall, Baldwin has done really well over the years. You can see cumulative profit has recently increased quite dramatically, which is a huge positive sign for you. The hard work and investment in automation and lowering production levels to increase contribution margins has paid off. With an average contribution margin of 46.2%, you're leading the way in the census technology industry, and market share is and will continue to grow as they continue offering low-cost products in the low and traditional segments. The company's strategy of a niche cost leader for the low technology segments meant that there was a heavy focus on offering reliable products below the expected price. There was a strong focus on the traditional and low-end segments of the market. Although initially there were some struggles with cash flow and low stock prices, all facets of your company kept focus on this strategy. Key components of the niche cost leader strategy involved keeping R&D, production and material costs to a minimum, which resulted in great contribution margins and the ability to compete on the basis of having a below average price. The discontinuation of products in select markets before being moved into the traditional was well thought through, with R&D decisions mapped out over the course of operations, and likewise capacity decisions provided maximum returns could be attained for the selling of plant and equipment. This slideshow shows the increases in market share over the years of operation. The low end has increased over time, but we'll take a look at the traditional more closely, as that is the major segment that we're competing in. In the fourth year of operation, Baldwin moved their product from the performance segment into traditional. This saw a slight increase in market share before decreasing in the segment in the fifth year. This could be due to the introduction of total quality management, where some competitors invested heavily, which saw positive results for them, leading to increases in demand of their products. The investment and time put into the traditional segment paid off, and the third product was introduced in the sixth year. Baldwin now has 4 products in the traditional market, and by the 8th year, we see their market share in this segment has increased to over 33%. Now we will hand over to Rob, who's going to continue with the review of the company's performance.